Good morning, guys, and welcome to your market report. I'll tell you, it's all panning out really good. Today is Thursday, April 19th, 2018, and let's start the charts right here. Okay, and let's go right over to the silver price. I suppose this is why I said it's all panning out really good. I like to see that silver hasn't dropped. In fact, it's went up overnight. It's up 12 cents today. Amazing, amazing, amazing. Here's what I think about this. I don't think this is the major breakout yet in silver. I say yet because I think the major breakout is coming, but I don't think this is the major breakout. I think this is like a little bit of a correction back up to the upside. It's back up in the range that it was. For months and months and months, it was in the range of like 1740 to 1710 or something like that, right? It stayed in that range. It was range bound in that range for months. And then it took that dip, the tremendous amount of paper or silver contracts that they used to knock it down into the 1630, knock it down a buck, or nearly a buck. They knocked it down about 80 cents. And they made a new range down at that lower shelf, like a lower shelf, and it stayed there for a long time. Now what it's done is it seems like it's bounced back up to the old range that it was running at for a long time, around 1720. And I think it's in that range now. It's found that old slot that it was in around 1720. I think that's what we're going to see. Is it's probably going to stay in around that old slot that it was in before. What it is it's finding support at these levels. And so it's going. Seems like it's going between these two levels of support: an upper range, and a lower range. Lower range being around in the 16s, and the upper range being in the 17s. And right now, I think it's went back to its old range that it was in a few months ago. Back when, And but I don't think this is really the big breakout that everybody's waiting for. But I think the big breakout is coming. It's coming. It's like, wait for it. Wait for it. It's still a good time to buy silver, even though it's went back up a little bit, in my estimation. Now, this is not financial advice, but in my estimation, there's still, I don't think, very little downside risk. I still think silver is a great purchase to make. So, now we're going to take a look at cryptocurrency right now. And what we see with cryptocurrency is Bitstamp at 8,200 bucks. I think it's slowly rising. Let's get the chart back. That's as far as we can get. No, let's go to 30-minute then. Okay, here we can see where she bounced back up from 65.10. And it was along in this range back here. And I made a video and I said that it was going to go up as high as 10,000 in the short term, before the big crash. And that's the big crash of the stock markets. And we're going to get into that in just a second. But this is exactly following exactly what I predicted it was going to do, Bitcoin. And so now what we're going to take a look at is cryptocurrency market capitalizations. $351 billion. Okay. That's up because it was like 330 billion. Everything's up. All the coins are up. Bitcoin Cash is up a lot. Litecoin's up 3%. Everything's going up, except for Tether. Tether's not up, but Tether's not really down either. Everything's going up. Bitcoin's up 2%, 82.32. Like I say, Bitcoin was like I predicted. $10,000 is what I predicted was the upper level of this push that's on right now, and I think we could see it go up into the 9,000 range very easily in this. But you got to understand that this is headwinds leading to a crash in cryptocurrency. This is what I think, and I think the crash is coming. And I'll tell you exactly when I believe the crash is coming. It's going to crash not when the stock market first crashes, and we got a stock market crash coming, The first lead-in part of the stock market crash, I think, is going to drive cryptocurrencies even higher. But it's going to happen when the stock market goes below, the Dow Jones goes below 20,000. So let's take a look at the Dow Jones. Right now, we got a little bit of an off day, but it's nothing really significant at all. It's only down 60 points. I expected it to make it to 25,000. It didn't. It made it up to about 24,000. What? Today it's 24,686. So almost made it up to 25,000. I was predicting 25,000 before a drop off in the Dow. What we're seeing that affects the Dow and is controlling these stock prices right here almost completely is the bond market. So we're going to take a look at the bonds today, and I'll tell you what we see. And the 10 years the one I watch like a hawk. Let's bring the charts in on this. The 10 years the one I watch like a hawk, 2.9%. We see it moving up. It started to chart up again. Now, what I want to show you specifically here is something extremely important. It's the tell on all of the markets right now. It's the tell on everything, and this is the 10-year. And we got to look at the chart to see this, to see what I'm talking about. We got to focus in here, and what I'm going to show you. Let me see where I can get it best. Let me try a 3-month chart, okay? What happened was, well, let me go to the out to 6 months. Yeah, okay, 6 months is perfect. Now, here's what I want to show you. The Fed come along right in here, and they started their quantitative tightening program. And you see what happened is they were really doing it. They were really doing their quantitative tightening, and that's what led into this upsurge in the price of the 10-year from down around 2.3% all the way up to 2.95, right? This big rise, this right here in the U.S. 10-year, and that ended back around March 21st or March 20th, right around in there. They started cheating. It's kind of like a fat guy that goes on a diet, and he says, I'm going to lose weight. Well, they were losing weight real good all the way up here. What they were doing was their quantitative tightening program. They were really doing it. What they did was they started cheating. And this is what I believe they did. They cheated, and that's when the bond rate started to fall, or the yield started to fall again. And we noticed that they fell down to this point right here on April 2nd. They fell down to April 2nd. I believe what happened is the emergency was over. During the emergency and the stock market was falling. You remember the stock market was falling? This is why the Fed started cheating. The Fed started cheating on their quantitative tightening program, but secretly cheating. This is what I believe. And they continued cheating until April 2nd. You notice what's happened since April 2nd till now? Look, you see what's happened? Let's take a closer look at it. Let's go to the 1 month and take a closer look at it. Okay, there's April 2nd, right? Right there. And now look, see her going up? She's going up because they're not cheating anymore. They've went back to their quantitative tightening. They figure everything's okay. They figure the markets have stabilized, and they're absolutely desperate to do their quantitative tightening. And they think that was a one-off with the market. They say to themselves, oh, well, the market fell off, but that was a one-off, and we'll get away with it this time. We can get away with it this time. So they went back to their quantitative tightening. Meanwhile, what's happening is this U.S. 10-year is starting to creep back up again to 2.9%. Now, what's going to fool them is that the stock market is not going to collapse, and it's going to allow them to continue with this, and they're going to pass the 3% mark. They're at 2.9 now. It's going to keep on creeping up over the next few days, and it's going to finally pass that 3% mark. And nothing's going to happen. And they're going to say, hey, boys, you know what? We're getting away with this. We're getting away with this. And they're going to be right giddy. We're getting away with this. They'll think they're getting away with it. then what's going to happen is this 10-year is going to slowly creep up to around 3.25%. Once it passes 3%, they're in the danger zone, by the way. Then they're in the danger zone. But they're going to ignore that. And they're going to keep going with their quantitative tightening. And the market's not going to respond. It's not going to respond right away. But when they get up around, I'm thinking around 3.25%, the market's going to respond, and it's going to respond suddenly. It's going to be like a knee-jerk reaction. It's going to be like nobody's expecting it, and the market is just going to absolutely do a 1929 style bust. This is what I'm expecting. It's going to drop. And when it first drops, Bitcoin is going to respond by going up. This is what I believe. Bitcoin's going to go up a little bit. But then somewhere when the market drops below 20,000, real fear and panic is going to set into the entire world. When the Dow Jones drops below 20,000 again. And it's plummeting like a stone at that point. That's when the fear is going to enter the markets. And the first guys in Bitcoin are going to decide to go in and hold cash. Some of the big whales are going to decide they want to hold cash. And at that point, all of a sudden the Bitcoin market's going to start to drop like a stone with the stock market. And they're all going to get scared, and they're all going to dump out. That's what I believe is going to happen, because it's a speculative investment. And everybody, when they really get scared, when they all get scared, they're all going to want to be in cash. I don't believe that this is going to significantly move the dollar up, but I believe the dollar will move up at that point, but not significantly. What we're going to see at that point, when the fear hits, if real fear strikes, we're going to see a change in direction in gold and silver. That's when we're going to get our breakout, I believe, in gold and silver. Not right now. I don't believe this is the breakout. I believe what we're seeing right now in gold and silver is a move back up to the range it was in before, around 1720, 1710, along in there. So I don't think we're going to see any significant price hikes up today in silver. You know, I mean, I could be wrong. Maybe this is a breakout, but I don't really think it is yet. I think the breakout's coming later. Anyway, let's take a look at the U.S. dollar. 89.61%. You know what, guys? I'm going to tell you, this is exciting. This is exciting because we're coming up to the breakout in silver and gold. It's coming up. It's coming up rapidly. And this U.S. 10-year is getting ready to go above 3% for the first time. Just as it's starting now. It's getting ready to go. It's getting ready to break 3%. And that's going to be exciting when the U.S. 10-year breaks 3%. You know, this is going to be exciting. At 2.906 today, and she's going up. She's on her way up. She's on the elevator up. This is it. This is what's going to break the markets right here. This is your baby right here. And I don't think they're going to stop this time. What stopped them last time was, and they secretly did some stimulation. They secretly injected money in. I don't know where they did it, but I just can tell by looking at the charts that that's what they did. And I can tell you when they ended it. They ended it right here. 4th, 2nd, 2018. April 2nd, 2018. They ended it. That's when they ended it. And you can see when they were doing it, down she was going, and then they ended it. You can see. Looking at the U.S. 10-year, you can see exactly what the Fed's doing. See exactly what they're doing. They can't get away with it. It shows up in the charts what they're doing. So anyway, this has been your market report for today. Thank you guys for tuning in, and we'll be back tomorrow with more on the markets. Bye-bye for now.